This is your investment update for February 2018. So, extremely volatile month. We talked a little bit about that in our January video since we were recording that right after it had started. Volatility continued through the month. The markets recovered a lot, and then towards the end of the month, we had some more bad days. The S&P ended down 3.8% for the month. International stocks were down about 4.2%. Leading the way down was the bond market. So the market's starting to price in, we believe, higher interest rates. Domestic bonds were down just short of 1%, and international bonds were down about 0.9% for the month. So that's really what we believe is going on with the market. Is we're kind of starting a new rate cycle on the way up. The new Fed chairman has said they may raise rates as many as 4 times this year. Beginning with this month, we expect another 25 basis point interest rate increase is what they've kind of telegraphed. And the market's just starting to digest that. We have the most debt in the global economy as we've ever had. And so obviously any kind of interest rate increase incrementally increases debt service costs and has a dramatic effect on the economy. Now the economy is doing really well and outpacing it, so we don't expect there to be any kind of like a disaster scenario. But we do think as they continue to raise rates, the market is going to continue with the volatility because it's just having to adjust expectations, and you're also reintroducing a discount rate back into the market. We've had 0 rates forever, and now they're attempting to go higher. The other thing we wanted to talk about, we mentioned FANG stocks a lot, Facebook, Apple, Amazon, Netflix, and Google. They're becoming more and more systemically important to the market, and in fact, the S&P was down 3.8%, but FANG stocks ended up 2.2% for the month, and they're now up 18% as a group for the year, while the S&P is only up 1%. They make over a little bit, around 20% of the return. So if, minus the FANG stocks, the S&P would have been down approaching 5.5% to 6% just for the month of February. And really, they're the only group of stocks that are kind of dragging the market along. Small cap stocks are down. International stocks are barely up as a group. And really, without that little small group of stocks, the market would have, a much worse look and feel to it. And so we're just monitoring that. Those are being driven a lot by ETF flows, and when they bounce back, that's where kind of a lot of the index money is going. That could work in reverse if the market really did get into a prolonged sell-off. And so we're just monitoring that. With any kind of sell-off, there would present some opportunities in the broader market averages. But that's just one thing we're continuing to watch in an area that we think people should be very careful going forward.